Okay, I think everything is almost ready. One second. Okay, I'm here and let's start. Let's see what you did, Daniel. How was your day, Daniel? That will be here. So you traded AL today, took it to the short side. Did you take it for an ascending triangle with an early entry or reverse ABCD pattern there? So you could think of it two ways. I mean, look at this AL in the pre-market. That was a really strong move up there. Actually, I have the chat room open. Let me mute it. Done. Hey, John. So yeah, L in the pre-market, strong move to the upside, a double top in the pre-market. Look at this week right here, fake breakout, right? It's just breaking out in the pre-market all the way to the daily level. And then it just gets sold off. This right here, when I see this in a normal day or in any day, I just get that bias that the stock is not strong enough. I don't like the stock to break out and immediately get sold off. This is giving me the impression that the stock might start selling off, at least for some time. Let's see at the open. What does it do? At the open, sort of a doji, a new 1 minute low, reverse ABCD pattern with 5 minute open range breakdown. 1, 2, 3, 4, 5. These are the 5 minute candle. This is the 5 minute candle. 5 minute candle with a new low, 5 minute open range breakdown, selling off all the way to the daily level, bouncing exactly from the daily level, and then starts forming lower highs. Right here, you could either look at it as a descending triangle, but this descending triangle is not really clear right there because you have a breakout down here. I would exclude this week right here. You'll have to draw it, but yeah, it's not a picture clear descending triangle, but you could see that it's making lower highs and it's having sort of a flat bottom for the breakout. Once you're having 3 touches to the upside, or 4 touches in this case, you could get the impression that it's descending, and then you see those flats right there, 1, 2, and the third is the breakout. You could either buy it on a descending triangle as close as possible to the resistance. You could buy it somewhere in the middle, not buy it, short it, and you could short it at the breakout, which is happening right there. In this case, Daniel decided to short it as close as possible to the resistance, which was really smart. You could put your stop loss really tight at the high of the wave or at the high of the previous wave. That would be maximum stop loss I would use there. Partial a little bit at the daily level, which is smart. I mean, it's the second time it's touching it. Maybe you are afraid it could form a double bottom in this case and go up. With an early entry, it's not bad to partial at the daily level, and this is one of the advantages of getting an early entry. You don't need to wait for the breakout. If you get an entry somewhere in the middle of the descending triangle, if you get it at the breakout or get in for the breakout, you definitely need to wait for the breakout before you take partial. Next partial at the daily level right there, and then exit at a new 5 minute high after sort of fake breakdown right there and the daily level. This was really perfect, and I love the way you managed it and the way you partial in this thing, Daniel. I get an email from a member who will not be able to attend the trade review, so let's see what he did. Okay, these trades are not from today, 13th of June. Traded NVIDIA. So let's see what we have on NVIDIA. This is sort of pre-market level right here. At the open, it's selling off and forming a new 5 minute high. Let's go from a bigger time frame to a smaller time frame. 2 minute high, 2 minute chart, you are having an engulfing crack setup, right? it's dropping down at the beginning, and then on the 2-minute chart it's squeezing up with a possible entry at a new 2-minute high. On the 1-minute chart, I would have got a little bit earlier entry. This is not bad of an entry. So it's selling off, closing as a hammer. On the 1-minute chart, starts squeezing above view up. So for me, this would have been like the perfect entry right there. Missing this entry, not bad. You could get in on a new 1-minute high. This is not so extended, and put your stop loss either at the low of the body or half of the body. Why half of the body? Because this is the range. You could draw the range right here. If it gets back into the range after it broke it, it's not a good sign. It doesn't show you that the stock is really strong. So this is not a technical level. This is just to give it some room to consolidate within the 1-minute candle if it decides to drop a little bit to the downside before taking off. So this was a really good entry and a good setup. Early partials, because you took 3 partials at the same level. You could take only 1 partial and then hold on to it. Right here, it's not dropping down. We could expect it to pull back all the way to the previous resistance area and then take off. The consolidation area right here doesn't really mean that it is going to reverse, because there is nothing telling us that it's going to reverse, right? If you just look at all the time frames, 5-minute chart, you see it's just taking off, pulling back, taking off, higher highs and higher lows. There is literally nothing telling you that it's going to reverse. On the 1-minute chart, this would have been a little bit concerning, but look at this. It's making a new low and immediately getting bought back up. Since that happened, then this drop is not really a problem right there. You could just simply ignore it and continue watching what it's going to do. This partial isn't bad. Daily level, this is amazing. Daily level, at the break of the daily level, not so bad as well. Let's see another trade there. MU. This was a one. This is not a bad trade, to be honest. This is not a bad trade. It just didn't work out. Look at this. You're having a pre-market level right here, below which it's consolidating. On the 2-minute chart, on the 5-minute chart, same thing. Market level below which it's consolidating. It's opening down here. This is the open price. This area right here is the open price. It's going up. This is looking really white. It's breaking above the consolidation area. On the 5-minute chart, on the 2-minute chart, same thing. On the 1-minute chart, he's getting in for a 1-minute open range breakout after a hammer on the 1-minute chart. Unfortunately, that doesn't work out. Early entry, I wouldn't have put my stop loss right here. I would have used my stop loss at least a little bit below the body. Even if I use that stop loss, I would get stopped out eventually. But yeah, this was a good setup, which unfortunately did not work out immediately. So nothing wrong in that one. Let's see, Uber. That's it there. Not sure where it gapped to, but looking at the pre-market, same thing. It's holding around this level right here. I wouldn't have taken it to the long side here within the 5-minute candle, but this is only looking at the 5-minute candle. Let's see what we see on the 2-minute chart. On the 2-minute chart, you see a hammer right here. Then you have a doji and a new 2-minute high. I wouldn't have traded it. It's more long than short because of it being above the moving averages and above view up. This candle, though it is a hammer, it's red and it got sold off eventually. This is a doji, which is an indecision candle. You took it at a new 2-minute high. Wasn't a perfect setup, not an A+ setup, but at least you took it with the direction of what you saw right there of the indicators. Early partials, I would put my stop loss down here at least, though I think that would be really tight looking at these wicks right here. It would need to be at least half of the wicks. Getting stopped out eventually. This entry right here would have been way better, because you could see that there are wicks down here. This is an indecision candle, not perfect. This is showing you strength. It's trying to fail and sell off, making a new low, but immediately getting bought back up, forming a new high. So it's sort of a double bottom right here, or sort of a W shape, and then a new high. So this would have been way better for an entry. Just a little bit extra confirmation that this is long. You're having a pattern included right now, not only indecision candles with a new high. but overall you managed it well, so good job. We don't have a lot of trades to review today, so how about we read the price action together and maybe we'll catch something to trade, okay? I'll show you my trades, or some of them. Let me see. I think I traded INO there, but INO wasn't a perfect trade. It was a really small winner but a really tight stop loss. And I had to exit break even. I managed this one really bad. You could see on the 5-minute chart it's going up, extended from the 9 moving average in the 5-minute chart. On the 1-minute chart at the top it's having a doji. I take it to the short side on a new 1-minute low, 22.20, stop loss 22.22, a little bit above the body right here, and it's dropping to, no, it wasn't 22.20, I think it was 22.24. yeah, that was so tight right here. It was the high of the week, 22.24. 4-cent stop loss. It dropped down right here. It was 3R for me. I decided to take half because I didn't like this pivot point right here. I wasn't really keen on it going to the 9 and the 5. Wanted to get in for a scalp, but when I took the partial, it just squeezed up a little bit up above me, or above the 3 Rs. It was 2.5 Rs right here. I took 50% and exited the rest of break even. The bad thing I did here is I didn't stick to my stop loss. If I just stick to my original stop loss, 22.24 or 22.25, I would have never partialed. I would have never get subbed out or break even, and I would have just took my partial at the 9 moving average in the 5-minute chart, similar to what my rules are telling me right here. Now it's just dropping down there. I'm not sure what it's going to do. I think it's going to drop. You see on the bigger time frame that's forming a double top on the 5-minute chart. Let me open this there. Let me actually see. Yeah, I think it's going to drop. But I mean, technical stop loss would be around 21.72. But it already dropped a lot, so I'm not sure about it. Okay, I see there is another member emailed me his trades. He'll not be able to be with us. So yeah, okay, I see that. Let me download it. 1 and 2. So let's see what he wrote there. Okay, so this is the Indian stock market. It's not the US stock market, but we'll analyze it according to the patterns we're trading right here, right? I mean, whatever the exchange is, whatever the stock market is, it should be trading in a similar way, right? Right here, you could see that it's forming sort of a pennant or an ascending triangle. I think this is the 1-minute chart. 5-minute chart, I would have personally not traded this so much because it's a little bit far from the 9 and the 5, but I see this is the type 1 ABCD pattern where it's going up, going sideways all the way till the 9 moving average gets closer to the price action, or gets literally into the price action and then bounces out of it and continues ripping higher. It didn't happen here. A lot of indecision candles, but yeah, it was more long than short looking at the wicks. I wouldn't have taken it because it's not an A+. A lot of wicks everywhere. It could have just dropped down similar to how it just went up. I see that it popped up. You didn't take any partial. Stop loss, I guess, was below the C level, somewhere down there, or a little bit below that. Maybe you use view up for a stop loss. I wouldn't use view up for a stop loss. I would use the low of this consolidation right here. Yeah, because it's either this or this. View up isn't the best technical level right here. So yeah, that was so much wrong. This would have been like the best stop loss in my opinion right here. Let's see what you did right there. Long, stopped out, short, stopped out, and long, stopped out. I think that's how it worked out, right? Or it was yeah, it must have been something like that. So look at this. First of all, I wouldn't take it to the long side right here. Look at the 5-minute chart. It's going up, nice, forming a doji at the high, forming a new low. Now when I see this setup, remember guys what you said, it could form a 3-bar setup. What's 3-bar setup? You're having long candle, small budget candle, a new high, and then it trips higher. This is the 3-bar setup. At the same moment, it could form a huge candle, small bar. It could be doji, it could be a reverse hammer, it could be a hammer, it could be whatever it could be. Anyway, small budget candle, new low, and then it drops all the way to the previous low. This is the setup, right? It could be one of it could be one of the two setups. In this case right here, it went down. So it's the second setup right here. And what's the target in this second setup? The low of the candle. Unless you see that this setup totally failed and it's broken. And when will this setup fail? It will fail if this part right here, let me erase a lot of extra stuff. It will fail if this part right here after forming a new low is going to form a new high. Other than that, I'm not looking at it for long. So it's dropping down, the target is here. Just let it do whatever it does. It could just, the market is trading in waves, right? Here I just draw it so simple, 1 bar to the upside, doji, and 1 bar to the downside. It could, sometimes it's not forming it in 1 bar. It could reach the low in 2 bars, in maybe in 3 bars, maybe in waves. But eventually the setup is a setup and the target is a target. It will be down there. So once I see that, I will not take these trades in the middle to the long side. Let's see what we have there. Let's actually see BBT scanners if you have anything interesting there. Are you guys watching anything right now or in any trade? PDD. This thing is interesting. I like it, but not now. I'm going to watch it for a reversal if it's going to get extended. Not going to chase it right here. Look at the price action. This is really clean actually. Going up, pulling back, uptrending, sort of an ABCD pattern, which I wouldn't really take. Pulling back again, continuing to the uptrend. This is really clean and this is really strong. On the daily chart, if you look at it, look at the daily candle right here. This is looking at the average true range. If you look at those size candles, and today's candle, it's really extended or really big at the average true range. So I would expect it to reverse anytime now. And not now, but yeah, I mean, one thing which would make me conscious about taking a reversal on this thing is that it's sitting at all-time high. It has been consolidating in this range for a couple of weeks, and today it's breaking up. Taking an extreme reversal, and by an extreme reversal, I mean a reversal which goes all the way to VU up and below VU up, would be tough. It's easier to get into ABCD patterns on these type of stocks which are breaking the all-time high or which are trading at all-time high are easier to trade with the trend. You don't have any resistance ahead. It just could run as much as it could run. So find an ABCD pattern and then just go for the risk to reward. Why is it easier to go for an ABCD pattern and go with the trend? As you said, nothing against you. What reason or at which level will short step in? I mean, I want to trade it for a reversal, but where will I short it? Will I short it here? Will I short it at 80? Will I short it at 93, 94? I don't know where to short it because I have nothing telling me where to short it. But if you trade it to the long side with the trend, you will have levels to trade it from. It's going up, it's pulling back, forming a hammer, new high, you have your stop loss, and what's your target? Your target is your risk to reward, 2 to 1, 3 to 1, 4 to 1, whatever you are looking for at this trade. Hey man, I don't see the scanner by the way. How do you use the scanner to find stock trade? How did you pick it up? So the scanner is in the chat room. This is the chat room here. I have it opened on the other tab. BBT scanners right here. And I had this one actually from the morning. We had PDT in the gappers list. It's not in these scanners. What do I have on my watch list right now? I have SPY, NIO, INO, Tesla, BNTX, Save. The main ones I was watching in the morning were INO and what was I watching? I already forgot. And Tesla. What's Tesla doing? Tesla is doing nothing. INO is doing nothing. NIO is doing nothing. So let's get back to PGG. This is interesting. So we have a member on YouTube who is saying that he's at NIO at 906. Do I hold? Do I think it's a good price action? So let's see. NIO, and you went at 906. Well, first of all, I can't tell you whether you should hold or exit, because if I tell you to hold and you lose, I'll be to blame. If I tell you to exit and you lose, I'll also be to blame. But I can see the price action. So looking at this one, this is already a huge move right there. I see sort of consolidation of the 50 moving average. It's continuing to go to the upside. On the daily, it gapped up, so it's strong. It's at all-time high, which is also good. The only levels we have are in the pre-market, which are up there. What I don't like about NIO is that it already did a huge move in the pre-market. When I see stock making a huge move in the pre-market, this is the move in the pre-market. You see it? Let's consider that this is the 100% move. I usually don't like trading it to the long side at the open. I expect it to sell off, which happened right there. It did sell off. I want to see a pullback of 50%, 60%, or 30% minimum if the stock is so strong, and I see that right here. Then I want to see a W shape, which I see right here, and then get for an entry with an A, B, C with a W shape, D pattern after a confirmation candle right here. This is the perfect entry for me. 906, in my opinion, it's just been a little bit of a late entry. Why is that? Because the technical stop loss is a little bit far. That's the technical stop loss right here. If I enter to somewhere down here, my best stop loss would be down there. That's a little bit of a wide stop loss, and I'm not sure where to tighten it. I would be able to tighten it after a pullback. If it's pullback to $9, bounces out of it, then maybe I could add and put my stop loss at $9. So I personally wouldn't have entered at 906 because the stop loss is far. The best entry would have been at least 895. I see that it went up, tried to sell off confirmation candle, and then a new long, which is 985. I think it was somewhere right here, 985, yeah, at a new 15-minute high. On the 5-minute chart, yeah, 905 looks like a decent stop loss, but it could drop a little bit more. Yeah, the entry was just a little bit late in my opinion. It's just going straight up. We usually try to enter after pullbacks. I mean, for now, it still didn't even get to your break even, which is good. Where should you sell it? Just hold it for your risk to reward. Hey man, don't see the scanners? Okay. Do you use the BBT scanners only, or do you maintain your own? John, I had my own for a while when I was developing a scanner for reversal, but now I don't have it because I don't need it. Everything I need is in BBT scanners. I'm using the Gapper scanners, and I use the RSI Extreme and multi-strategy scanners, and since that is in the chat room, why do I need my own scanners, right? I know bounce of view up. I know, let's see, I know. It could be bouncing a view up, and it could be forming a reverse ABCD pattern, right? Look at this. This is the previous range we had. This is the previous range. Let me actually draw it like this. This is the previous range we had right there. And now it's breaking out of that range. And when the stock is breaking above the range, this is really good. It's pulling back, and I want to see it bouncing off the range and continuing the uptrend if it's strong. Since it's not strong, it decided to form a double top and get back into the range. When I start getting back into the range, this is a weak sign. What I could expect it to do is to form a reverse ABCD pattern and continue selling off. When will I be interested in this thing to the long side? I want to see it forming in W shape, and only then I'll be interested in this thing to the long side. A bounce of view up in this case isn't really good in my opinion, or not the perfect setup. How wide a stop loss on ABCD would you consider? I've analyzed one of my stocks over 2 weeks, and on largest trends of the day, the pullback average is 2.5%. My position has to be smaller though. Not sure how to think about it. So Lou, on ABCD patterns, it depends on your entries. if you're a lifetime member, I would recommend you watch my webinar on ABCD patterns. It's a little bit long, but it has a lot of details in it. When to have a tight stop loss, when to have a wide stop loss, and when to have where to have the stop loss depending on the ABCD time. But for now, since we have time, I will talk about it just in short. And again, it depends on your entry and the type of ABCD pattern. And let me get a plain page. I love drawing, though I'm really bad at drawing. So 3 types of ABCD patterns. First type of ABCD patterns, which looks like a stair right there. Okay. Like stair, and this is the 9 moving average. Stock is getting so extended from the 9 moving average in the 5-minute chart. It's dropping down, going up. In this part, you're ignoring it. You don't want to get in for an ABCD pattern when it is extended from the 9 and the 5. It already did a huge move. You are just avoiding doing anything. Once it's getting closer to the 9 and the 5, giving you a confirmation candle, either on the 5-minute chart or on smaller candles inside, hammers inside, as for a confirmation. Oh my god, this is ugly. Hammers inside the 5-minute chart, new high. You get into the long side for the break. And your stop loss is depending on your entry. If you are going in for the break, your stop loss is new 1-minute low. If you are getting somewhere inside this chop right here, inside this range, your stop loss is the low of the consolidation. Okay, you want your entry. If you decide to enter inside the range, then I would recommend that you get in somewhere as close as possible to the low of the range. You believe that this thing is long, right? You are looking for an ABCD pattern to the long side. So why would you get into the long side as close as possible to the high of the range? You are taking it to the long side anyway. You are watching for it to take it to the long side. Then get in as close as possible to the support to tighten your stop loss and to have a great move after it's breaking out. This is on the first type. Second type is similar to the first one, but it's a little bit slower than that. Now the third type is where it's getting a little bit complicated. It's not complicated, but yeah. You don't want to get in A, B, C. This is the 9, and you might say, okay, it went to the 9 moving average in the 5-minute chart. It bounced out of it. I'm taking it to the long side. After a parabolic reversal, you don't want to get in on the first leg up right there. Why is that? Because it could be also forming a reverse ABCD pattern and then shoot back down. You need this reverse ABCD pattern to be broken. And when will this reverse ABCD pattern be broken? It will be broken if the reverse C is broken, right? Once it's making a new high right here, those who took it for a reverse ABCD pattern will be getting stopped out, and those who were looking for it for an ABCD pattern could just simply get in with no borders or no resistance ahead except for the high of the day. But yeah, the setup is working. If it's forming a double top and it's starting to drop, you could always exit at break even, and if it's working, you could just continue holding on to this setup. What's your stop loss? Depending on your entry. If you see that it's actually starting to fail and it's forming a higher low with confirmation candles down here, you could take it to the long side somewhere down here, put your stop loss below this low right here, and start taking partials at the high of the day. If there is nothing confirming an entry down there, you just wait for this C level to get broken. You get into the long side somewhere right there, and your stop loss is still the low of the wave, right? Because you're still inside the range. You can't put your stop loss at a new 1-minute low right there. And then just simply hold on for this trade. Hey man, how do you use the RSI Extreme when BLFS showed up on the scanner? Did you share the stock? John, I missed that one, but let's see what it did. I saw that it was called at 10 o'clock. I actually missed this one. I mean, this was perfect, but I was so tired today, and I decided to take a nap and sleep. Sono. Isn't this amazing? If you watch my webinar yesterday, extended from the 9 moving average on the 5-minute chart, way extended from the 9 on the 5-minute chart. At the high, it's forming a shooting star, a reversal candle. You have an increasing volume, climactic volume. The new 1-minute low, take it to the short side at 1541, 1542, 1540 if you are late. Stop loss a little bit above the body, or you could put it at that week, 1548, and then just hold on all the way to the 9 moving average on the 5-minute chart. This was perfect, but I missed this one unfortunately because I was sleeping. I had to take a nap. BLFS, let's see it. It was called at 10:08. Let's see if I would have traded. Now look at this. This is perfect. Same thing, right? On the 5-minute chart at 10:08, it is way far from the 9 moving average in the 5-minute chart. It's being called in the RSI scanners at 10. It was called at 10:07 actually. 1007, there it is, somewhere down here. You ignore it, you don't take it to the short side once it's called on the scanner. You want to see reversal candles, confirmation candles before you take it to the short side. It's forming a shooting star or reverse hammer. It's not shooting star because of this week, but let's assume it's the shooting star. At the high of the day with slightly increasing volume, you could see that the average volume is somewhere down here. So this is a climactic volume at the high. You take it to the short side on a new low. You don't take it to the short side on this candle, right? You're waiting for a new low. You're having a new low somewhere down here. You take it to the short side, and that's your stop loss. If it's giving you the risk to reward, you are taking it. If it's not giving you the risk to reward and you're holding through it, you see one wave, higher wave, higher wave, you could either exit at break even somewhere right here or exit at your loss after that. Look at that. After that, what's happening? You don't take it to the short side here. You don't take it to the short side here. I mean, you could try it to the short side here. It's decent. Let's see what it does on the 1 minute chart. This is at 1054, 1055, 1054. I wouldn't take it at 1054 right here. 1054 is within this candle because it just started moving up, right? It's just broke the high of the day and it's consolidating at the pivot point. The previous resistance is acting as support, so no, not taking it to the short side right here. It's going up, climactic volume, double top. I'm not sure if this is Peter's mountain pass or no. Reverse hammer or shooting star at the high of the day, taking it to the short side on a new low, and then this one works out perfectly. So first attempt it would be a loser, second attempt it would have worked out. And if you saw my examples which I included yesterday, on a lot of those examples I had at least 2 or 3 attempts. I'm getting in, I'm getting stopped out, then I'm getting in again. Nothing works out from the first time, right? You try to catch the top of the trend, the top of the move, or the bottom of the trend or the bottom of the move, and it's tough to do. Sometimes you just misread it, you get an earlier entry, but the next entry works out like a charm, hopefully. Plug and WKHS, I don't know, I think these are going to spike over holiday weekend. I can't really tell you what those ones are going to do within the weekend because I never tried to swing trade or to anticipate a move. I just trade the shorter time intraday, and this looks strong. It's uptrending, so yeah, maybe it will continue spiking over the weekend. Maybe it will be done because this is already a huge move right there. So you can't really tell unless you are going into deeper fundamental analysis, which I never do actually. This thing is looking toppy for me, but this is intraday, so I can't tell you what it's going to do within the weekend. Yes, low, exactly. It's as soon as the candle is making the new low. I don't wait for it to actually close because after the close it could be so late. I could miss the move after it closes. Let's see what we have in the scanners. Nothing there and nothing there. Okay, let's see what PDD did. I wouldn't have caught this one. Yes, it's going to the upside, not so extended from the 9 to the 5, and yes, it's reversed to the 9 to the 5, but I can tell you why wouldn't I take this reversal right here. We're having a lot of fake new lows, right? New 2 minute low here, new 2 minute high. New 2 minute low, new 2 minute high, new 2 minute low, new 2 minute high, and same thing, new low, new high, and then it's making it the same thing, new low right here. So since it failed a lot of times, what would guarantee that it's going to work this time? These type of trades I usually avoid. I let them do whatever they do. If it starts uptrending clearly in the next 10 minutes or I don't know 15 minutes with no fake new lows, then I might consider shorting it. But right now I don't regret seeing it going to the 9 to 5, and I will not regret seeing it even going way lower than that. The 15-minute chart is showing you a good reversal pattern. Look at this. Going up, going up, going up, doji at the high, and this is the first new 15-minute low. So if I'm going to trade it, I'm not going to trade for a parabolic reversal. I could trade it for sort of an extreme reversal. It's a little bit early for that extreme reversal, but you have enough indicators. Stop loss at 92.18, entry somewhere right here, and then just try to go to the 9 moving average on the 15-minute chart right there. The tough thing about going into extreme reversals right here is that it's at all-time high. It could just simply fail at any time. Yeah, that's a really good sign also, Lou. If you see a lot of fakes right here, you could wait for what Lou said. It could dropping down, coming back up, forming a double top on the 2-minute chart, forming a new low, and that would be your entry. Your entry will not be here because there were a lot of fakes down there. You will wait for another pattern confirmation. You're having now a new 2-minute low along with a double top on the 2-minute chart or on the 1-minute chart. In 5-minute chart, it looks like it's bouncing off that line. Will you go long at the break of $92? I don't think I would take it to the long side. It's making lower lows and lower highs, and it could just simply form a reverse BCD pattern. On the 15-minute chart, a reversal candle at the high of the day. On the 30-minute chart, you're having a doji at the high of the day, and a new 5-minute high against a reversal candles on bigger time frames is nothing. So I would just simply avoid it to the trend continuation. The only play which I would have considered taking is a short for an extreme reversal, but I didn't take it because I'm not really comfortable with it being at all-time high. I'm interested in what it's going to do, and I think I'm going to watch it. Let's see. NIO, let's see what this thing is doing. So NIO is good. Now look at this. If you are still in it, I could tell you what I would do right here. This is going way extended from the 9-minute average in the 5-minute chart. It's forming a new 2-minute low. I would take a partial right here. I would not bail fully because this is looking strong, but I would take a partial at the new 2-minute low. This is not a parabolic reversal yet, but again, extended from the 9 and the 5, increasing volume at the high of the day, new 2-minute low. This is a parabolic reversal with the target, the 9-minute average in the 5-minute chart. There is no reason for me to hold it all the way to the 9 and the 5. So once it's forming a new low, 930, I'm taking a partial and continuing to hold on to this thing. If I see that it's forming a reversal candle at the high, a shooting star, a doji, whatever reversal candle or pattern it's forming at all-time high, at the high of the day, then I might actually bail 70% of my position. Right here, I would usually exit 50% and see what it's going to do at the 9-moving average in the 5-minute chart or at the previous pivot point. If it's holding the previous pivot point, bouncing out and continuing the uptrend, that's good. If it's getting back into the range of the pivot point, I would expect it to actually dump a little bit more. Hey Girish. PGG is still dropping there. So else I have my watch list there. Save is doing nothing. BNTX is just going sideways. It's ugly. And then IO is doing nothing, so there is like nothing happening there. So let's see. And nothing there as well. Look at this, GRAF is being called in the scanners for a parabolic reversal. This has just been called out there. Let's see what it's going to form. Extended from the 9-moving average on the 5-minute chart, going up. This is a hammer, so I'm not taking it to the short side on a new 1-minute low. Even if it works out to the short side, I'm not taking it. If it's giving me a confirmation candle, I might try it. I'm not saying that it's going to work out. But no, actually, this thing we're not trading because it doesn't have shares for short, unfortunately, on IB. But let's see what this thing is going to do, just to analyze the price action together. Extended from the 9 to the 5. Now we're waiting for a signal to take this thing to the short side. No, John, I pick it at the previous resistance. For example, if I draw some levels right here, I would draw a level somewhere down here, a level somewhere right here, a level right here, a level right here, and those are the points which I would just consider pivots. This right here. Anyway, so now we're having a doji at the high of the day. I don't like these dojis so much. It's not A plus because it has a bigger lower wick. Sometimes I would try it if it's making a new low, some at least to 1806. If it goes to 1806, I usually short it, put my stop loss at 1818 at the high, or 1819, a cent above it, and then go in for a target the 9 on the 5-minute chart. You could see that it still didn't do that, and it's still going higher, but I could see that it's starting to get heavier down here. Now it's going to break it, I guess. Not taking it to the long side for this ABCD pattern, because it's an ABCD pattern on the 1-minute chart, but it's extended from the 9 on the 5-minute chart. I would be waiting for a reversal pattern on this thing, a reversal candle. Still nothing there. And remember, sometimes you'll be watching it like I'm doing right now. You are waiting for that reversal candle, waiting for the good entry, but it just decides to do what? Dump in one candle, and you miss the reversal. And that's totally fine. You'll watch or find something else which is giving you all your criterias before you actually get it. Let's take at your trade loop before we continue there. So you try to take car to the, I actually traded car as well, and this is a good short, and we had the same entry and the same exit. Let me show you quickly. I traded it multiple times. I took it to the short side once, short side second time, and short side third time. The third time worked like charm, but I'll talk about the second one only. This short, I have no idea what they do there. Why did I short it here? Why did I short it here? Let's see. I have no idea why I did that. I took it to the short side for a sort of fake breakout, and then a new 1-minute low, stop loss at the high of the week, new 1-minute low, increase my average, get stopped out. Yeah, this wasn't a really smart trade. Anyway, this was good. It's getting extended, parabolic. I'm taking it to the short side right before the close. Should have taken it at a new 1-minute low and exited at break even. This is the same trade we've taken low. Yeah, this was really good, and you saw it, I saw it. It was a setup, right? It didn't work out for you, and it didn't work out for me. I mean, it's totally fine. That happens, right? This was a good setup right there. No new 1-minute low, no new 1-minute low, no new 1-minute low. Finally, a new 1-minute low, you take it to the short side. Then you see that it's actually not working. A lot of weeks, a lot of dojis, new high, and you bail on it. But look at this. If we held on to this thing actually and respected our stop loss, which was above the body, right? And that was your stop loss. That was my stop loss. And I bet that was your stop loss because you're trading this a lot. We would have never been stopped out, and we'd have got a really nice move out of this thing. I re-entered later, somewhere down here, for a sort of reverse ABCD pattern, which worked out, but I think I should have held on to the original trade. So look at this. This is what I was telling. You see increasing volume at the high of the day. Your stock, which is uptrending, extended from the 9 and the 5, 3 criterias. I don't see a fourth criteria. If it did this candle right here, if it was at the high of the pre-market, I would have shorted it before we have a new 1-minute low. But since it was still below the pre-market high and it did that, I'm just letting it go. Like, this is a climactic volume at the high of the day with a new 1-minute low, but the risk to reward will be messed up. You take it to the short side at 13, stop loss at 50, that's 40 cent stop loss. 40 cent stop loss means your target, the 9 and the 5, only 1.5 R. That's not much. I'm just going to continue watching it. Is it going to drop or it's going to go higher? If it's going to go higher, I'll be waiting for another confirmation candle before I take it to the short side. Let's see what it's going to do. See, it's struggling, and I like that you are having a climactic volume at the high of the day and you have stock struggling up here. Doesn't mean you're going to short it right here on the top. You need confirmations, right? You need a new 1-minute low, you need a reversal candle. We are having a pattern forming in, which is a double top on the 1-minute chart, but this is not perfect double top. I would have liked it to consolidate one more minute down here before forming a double top. If it's going to drop now and make an engulfing at the 1-minute chart, I don't like it. I'm not taking shorts after engulfings. I want to see a reversal candle. Lyric, you could Google reversal candles and reversal patterns. Evening star, morning star, shooting star, dragonfly candle. doji, spinning top. I want to see those candles at the top when the stock is extended from the 9 and the 5. Once I see that candle, then I could take the trade to the short side on a new low. Let's see. So look at this, it's trying to form a reverse hammer right here, but this is the reverse hammer inside a chop. It's not bad. It's not an A plus setup, not a perfect setup, but it's not bad. I mean, at least you have something in there. And for a first attempt, it wouldn't be bad to try to the short side down here after this candle right here and the target the 9 and the 5. If it fails and continues going higher, you could wait for another confirmation candle at the tops before taking it to the short side. Ryan, we don't put our watch list for the next week earlier. We do it on the same day. So on Monday, you can come to our channel on YouTube, Beatable Traders. We're having the pre-market show. And on that pre-market show, we will start building the watch list based on the gappers, on news, and we'll decide what to watch on Monday. This thing is still not failing. Why did it just freeze? I guess volume is getting lower. It looks like it wants to break out. But definitely not taking this thing to the long side when it's far. I don't like going with the trend because the risk to reward will be messed up. I can't put this would be need to be the stop loss again, 30 cents, and buying the tops, selling the bottoms is not how I love to trade. The level 2 is dead. There are so little shares there, so it could just simply break out. The spread on that thing can get to 3 or 4 cents, so if it breaks, it could shoot up at least 10 cents, 12 cents. Looking like it's continuing to go higher. See, the price action is horrible. Dropping down 30 cents and going up 20 cents. You can't have a tight stop loss on this thing, right? You can't have a 5 cent stop loss, 6 cent stop loss, or 10 cent stop loss when in one candle it could just simply make a 30 cents move with around 10 cents spread. I mean, look at that. The spread is 50 cents now. It was 1 cent like a couple of minutes ago. Now the spread is 15 cents. Having a spread of 15 cents and a stock moving 30 cents, you could easily get out with 45 cents loser. So no tight stop loss on these type of stocks. It must be a low float. Let me check the float on this thing. Yes, 24 million shares. Okay guys, I think today will end up a little bit earlier. Not much action today, and I think that's because tomorrow is an Independence Day. A lot of people are out, so yeah, happy Independence Day. And can I ask a question? Yeah, of course, Lou, you can ask a question. You're welcome, everyone. So I'll answer Lou's question and then I will head out for today. Now that's an engulfing, and I'm not taking reversals on engulfings most of the time. Lou, are you still there? Do you ever take parabolic reversal against hammer on the top of the trend when it's supposed by huge volume? I noticed some of the stocks just dump when that happens. That could be because look at this. A hammer at the top of the trend is not called a hammer, it's called a hanging man. Okay, and a hanging man at the top of the trend is a reversal pattern. If you're having a hanging man with an increasing volume, it means you're having a reversal candle with a reversal signal on volume. New low for an entry and then a dump now. What does it mean when you're having this increasing volume on a hanging man? It means that there is a lot of action happening within this one candle. A lot of buying and a lot of selling and a lot of buyers are trying to push the price higher. However, they couldn't push it even above the previous candle, right? And after this climactic volume, after a lot of action, while you had small volume before, the next candle, the sellers win and they make a new 1 minute low. You see, so yes, it was a hammer, which is a bullish pattern, but at the top of the trend it's called the hanging man, and then it's a reversal candle. You could trade it to the short side after climactic volume. Another place you could try to take it to the short side would be after or below a huge ask. So if you're having some candle right here, then you're having a hanging man at the top, somewhere down here, and you're having, let's say, I don't know, 150,000 shares on your way, and then a new low. That's also a good way to trade this candle. Other than that, no huge ask and no increasing volume, I'm not trading it to the short side. It's usually just a bullish candle for me. It's confusing and it's tough to trade it at the high. It is a reversal candle, but you need to be careful about it. You need more confirmations. This 1 minute chart showing you a hanging man with an increasing volume. This right here, it is a hanging man, but it didn't make you a new 1 minute low right here. Right? Another thing, this is not a hanging man. The hanging man should be at the top. It should be right here. Okay? Okay, this I see, but this is not a climactic volume. This is the average volume it has. Right? So this is a reversal candle, but the volume is the average. I'm looking at this, it's somewhere around the average. And then a new low. So basically you could trade it to the short side because this is a hanging man at the top, but I personally wouldn't because there is no enough confirmation. I just get stopped out more often when I'm going against it to the short side. Yeah, that's it, low. WKHS is being called for a long. Now this is decent, but we'll see later. So yeah, that's it. Have a good day, everyone. Have a good day, guys, on YouTube. If you have any questions, feel free to email me or mention me in the chat room. The chat room, guys, on YouTube. I'll type my email. You can email me if you have any questions. And have a good day, everyone. Bye bye. Enjoy the long